I'm so glad you're with us on the Clark Howard Show, where it's about you learning ways to keep more of what you make. Coming up in just 20 minutes, let me tell you something. Today's Clark-rageous moment is something that makes my blood boil when you've been a good saver and somebody ends up eating up money that you have saved for your own financial security. I got heads up for you. And a half hour from now, so many people in the United States travel now outside the United States or have relatives or friends outside the United States, and you need to send money. Sending money can be a complete ripoff. But now there are online platforms where you can send money nearly for free to countries around the world. I'm going to tell you about the new developments, the new opportunities that can save you a lot of money. I want to talk right now about something I'm very interested in. There is a study that was written up in the Harvard Business Review that found that women-owned entrepreneurial firms are generally far more successful than male firms started by guys. That women firms outperform the men firms by over 60% of the time. It's not even close. And the women firms, it doesn't matter where in the country they're based. A lot of startups in recent years have found their greatest success, particularly in the Bay Area and Silicon Valley. But by the way, forgetting the women angle for a minute, I want you to think about this. The cost of doing business now in the dominant entrepreneurial markets, like Silicon Valley as an example, the cost of housing, the cost of running your offices, everything is so off the charts that a lot of people are finding that even with tech firms, it pays to set up your tech firm elsewhere in the country where the overhead is much, much lower, and people may even, they may be willing to work for less because the housing may cost a fourth of what it would be otherwise, and that term that's kind of fuzzy, quality of life, may be better for them elsewhere in America other than where businesses have tended to cluster. The other stunning thing from the Harvard report is that the younger an entrepreneur is when he or she starts a business, the more likely the business will be successful. That businesses started by people at 25, as an example, tend to do much better than businesses started by people that are older. I found that a particular interest because when I started my business, I was 25. And part of it may be that when you're really young, you can work 1 million hours a week and solely focus and singly focus on that business. So just want you to know, young in particular, women especially, if you don't like working for somebody else and you have a business plan or business idea and there's space in the marketplace for it, you have the potential to be exceedingly successful. I know there will always be people around you that will tell you why you shouldn't have the guts and why you shouldn't go start your own business. If people have reasonable objections to your idea, that's one thing. But if it's you shouldn't take the risk, listen, no risk, no reward. Brig is with us on the Clark Howard Show. Hi, how are you doing?
Fine, thank you.
So you have a home you want to fix up or make fancier. Which is it?
Yeah, there are a couple of things that need to be done, and I think it's going to be quite a couple of $1,000, something that I don't have readily available. So I need to get a loan, but I did not want to necessarily do a home equity loan, just because I'm not so comfortable using my house as collateral.
Okay.
So I was just wondering. I know that interest rates these days can get pretty low depending on where you go and how you do it. So I was wondering if there was any suggestions you had as to what I might do as an alternative to a home equity loan.
All right. Well, you said it's a couple of $1,000s in repairs.
Yeah.
Is that right?
Yeah. Yes.
When you're dealing with an amount that's just a few $1,000s, doing a home equity whatever generally is not going to be a good idea anyway. Because it used to be you mentioned home equity loan, but it used to be you could get home equity lines at no cost, and the interest rate floated. It's a pretty good interest rate, but it could go up and down. Now you don't get home equity lines set up free, so you'd have a setup cost and all that. So this is a case where, don't think I've lost my mind, okay?
Uh-huh.
This is a case where using a credit card to pay for repairs would make the most sense.
Okay.
Because then you have a couple of incentives. One is if you charge up a couple of $1,000s to do home improvements, you're then paying a meaningful rate of interest for that money, which gives you an extra incentive to work really hard to pay down those balances. And using a credit card, you don't have any upfront cost to use one like you would if you were setting up a home equity line. And yes, it's true. If you do the credit cards, you're not putting your home at risk.
Right.
Now, there is one other alternative that might work for you. How good is your credit?
The last time I checked, it was pretty good.
Okay, so if you got a good credit score, you might also look at prosper.com or lendingclub.com.
Uh-huh.
Have you heard of either of those?
No.
Go check out prosper.com and Lending Club. They lend money to people and businesses for a variety of things. You state what you need the money for, what you're going to use it for, and how long it will take you to pay it back. They check to see what your credit looks like, and then people agree to lend you the money or not. So you post yourself there, and people, and no one person would give you all the money for the home improvement. A lot of people pitch in the money and lend it to you at usually pretty decent rates, and preferable often to what you'd have if you did my first suggestion, which is to pay for the home improvements by credit card. So when we hang up, I'd love for you, when you're at a computer, to look at Lending Club and Prosper.com. Ron is with us on the Clark Howard Show. Hi, Ron.
Hey, Clark. How are you?
Great. Thank you, Ron. You have a question about one of the giant monster mega banks and something they're offering you.
I was recently at my financial institution, and they offered me a service that allows me to track my credit on a month-to-month basis and would notify me to fluctuations to my score, and also provided me with an identity protection service. Basically, my question is $12 a month worth this fee?
Definitely not.
Definitely not.
Absolutely not. Don't give them $144 a year of your money. And if you do want to have access to credit monitoring, that's actually now available for free sometimes. And there's a website that's giving the credit monitoring for free, as we're speaking at this moment, called Credit Karma. Don't know if you've ever heard me mention Credit Karma.
I have, actually.
And they are offering free credit monitoring. You can see it right on the front page of Credit Karma. They'll give you daily notifications of changes to your credit. And so it's the same kind of thing that you would be getting from the bank for $12 a month, you can now do for nothing. And they also offer monitoring of your accounts if there's unusual activity in them, on top of whether or not somebody's trying to open a new account as if they're you.
Okay.
Okay?
Thank you very much.
So don't let the giant monster mega bank have that money from you. And while we're here chatting, Ron, why are you with a giant monster mega bank anyway?
I'm sorry, say it again.
Why are you with a giant bank anyway? You need to find a good local credit union, an online bank, a small local community bank. Go somewhere where they're going to love you and treat you well. Tony is with us on the Clark Howard Show. Hi, Tony. How are you?
I'm good. How are you, Clark?
Good, thank you. How can I be of help to you?
I am having a problem with my credit.
What's wrong?
Well, my mother left me for drugs when I was 4, and I'm now in college, and I'm trying to start my credit up and was applying for credit cards to build it. And after I got denied quite a few times, I decided to go through Credit Karma to see what my score was, or even if I had a score at all. Well, come to find out, my score is a 500, and my identity has been used since 2009 by my mother. I have already had to close a bank account because she kept clearing my account out. I am so disgusted and stressed, I don't know what to do anymore, and also might not be able to go back to college because I will not be able to afford it, and because for some reason they need her tax information for financial aid, and I just don't know what to do.
All right, well, you are not her dependent.
No, I am not her dependent, and Experian suggested that I file a police report?
Yes.
Okay, so
that was actually very good advice from Experian. When you have a problem where your identity has been stolen by a relative, and I mean, how awful. And I must commend you that you are seeing to improving your life, going to college, trying to set yourself up for a good future, and she's just taking advantage and trying to rip you apart, and I hate that. So let's talk about what you got to do. Your mom does not deserve your loyalty because she sure hasn't earned it, has she?
No, sir.
So you need to file a police report, because the way the identity theft is treated is if it's a relative and you just acquiesce and you don't do something like file a police report, you're considered to be an accomplice, or you're accepting it and you end up responsible for those things.
Okay.
But you are not responsible for your mother's failings. And to give you a credit score of 500 because your mom has been masquerading as you and running up charges as if you're you and all that, that is unconscionable and unacceptable. But the first step now has to come from you filing the police report and let the chips fall where they may.
Okay.
And then it's
about the financial aid. Do I have to have her information?
No, because you are not her dependent. And you're dealing with the financial aid office at your college telling you that you have to have her?
Yes.
For federal student loans?
Yes. It was for the FAFSA.
Okay. We're going to do what we can to help you and guide you here, because this is terrible. So we're going to do everything we can to step in here and help you get that college education you want, be able to qualify for financial aid, and guide you through the process of getting your credit clear. Hang on just a second. We're going to talk with you off the air and do what we can to can't get you a clear, clean path right away, but help you make that happen for yourself. Here on the Clark Howard Show, we do the Clark-rageous moment specifically to give you guidance to stay out of harm's way. I want to give you some information about something that is so common as a mistake people make in retirement accounts that I want you to know, don't do it. And if you've already done it, I'm going to tell you how to limit the damage.
Scams, rip-offs, outrages. It's a Clark-rageous moment.
If you've listened to me for any period of time, you've heard me talk about what trash variable annuities are. And I saw an item in Kiplinger Personal Finance that 60% of the variable annuities sold are people putting them inside a retirement plan like an IRA. So that is, in my estimate, complete and total financial malpractice on the part of whoever would have sold that to you. It is horrendous. Should not even be allowed. Why? Because a variable annuity has some characteristics of an IRA, where it's not taxed currently, it's only taxed when you spend the money later. That's what an IRA is. So you're paying 2 layers of fees for the same deferred taxation. But that's only the beginning of the problems. Variable annuities have massive, what are known as surrender charges, if you decide you want out before 7 to 10 years. Second, you pay expenses on them each year that now can be 50 times what it would be for you to be in one of the low-cost investment kind of choices I list at clarkhoward.com. The thing is if I'm reaching you too late and you have already been put in one of these trashy variable annuities, you can reduce the harm to yourself if you move that annuity to a low-cost provider. There are 2 in particular. TIAA-CREF. Now I think they just go by TIA. TIAA-CREF. And the other is Vanguard. Those 2 alone offer much, 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 much lower fees on variable annuities that should cut the costs you're paying for having one by about 2/3 or more. So, first rule, never, ever, ever, not ever buy a variable annuity. But if you already have, at least move it to a low-cost provider and limit the hurt.
Rocket Mortgage by Quicken Loans proudly supports this podcast. Rocket Mortgage brings the mortgage approval process into the 21st century. It's fast, powerful, and completely online. You see, Rocket Mortgage has taken all the complicated, time-consuming parts of applying for a mortgage out of the equation. Hate searching through stacks of old files and paperwork? Well, with Rocket Mortgage, you can easily share your bank statements and pay stubs at the touch of a button. It helps you get approved in minutes for a custom mortgage solution that's been tailored to your unique financial situation. Even better, with Rocket Mortgage, you can do all of this on your phone or tablet. It's a quick online process that you can manage from the convenience of your couch. So if you're looking to refinance your mortgage or buy a home, check out Rocket Mortgage today at quickenloans.com/save. That's quickenloans.com/SAVE. Equal housing lender, licensed in all 50 states. NMLSconsumeraccess.org number 3030.
Welcome to the Clark Howard Show, where you learn to save more and spend less, and don't let anybody ever rip you off. When you want to save money, go to our deals site, deals.clarkhoward.com. And when you have a question for me, clarkhoward.com/ask. Our Facebook presence is facebook.com/Clark Howard. Over 1 million people now that are following us on Facebook. Why are they doing it? Because you get up-to-the-minute information that'll help you save or make money or avoid those ripoffs. Speaking of ripoffs, something that has been a ripoff forever is, let's say you're traveling overseas and you get pickpocketed, let's say. And there you are in some foreign city, and you need money. So a family member, a friend, sends you money. And maybe they go to a bank, maybe they go to a traditional wire house to send you money, and the fees are humongous. At the time, you're just happy to have the money come your way, but the middle person takes a huge chunk of the money that you're being sent. A lot of Americans have relatives overseas who, just live overseas, and they live here, and they send money back home to where their relatives are. And again, they're charged huge fees to do so till now. There's a startup called TransferWise.com, TransferWise.com. And they reduce the cost of sending money overseas to almost nothing. And it's virtually instantaneous. They actually give you the up-to-the-minute official exchange rate. There is no buy-sell spread. They give you the real deal on the money you're sending overseas. It is a absolute game-changing thing to use it. I'm looking right now, and gosh, you can send money from the United States all over the place. And you just pick where you're sending it, and you click on it, and it shows you instantly, if you send so much money, how much in the local currency you're sending it to, that individual will receive. And again, the fees are almost nothing. It is a enormous change in the marketplace. If you're giving money to, in the United States to someone, you can truly give money to somebody else for free. If you haven't ever heard me talk about Venmo, Venmo, which is an app for your phone that allows you to send money right from your phone to a friend or family member for free. Costs you nothing, costs them nothing, and they have the money not instantly, but they get it really quickly, and it's available for them to use and spend at no cost. If that kind of stuff scares you, Walmart now has a money service where you can go into a Walmart store and for free send money to someone elsewhere in the country, and they just go to the Walmart near them and they get the money you have sent for free. Follow me at facebook.com/Clark Howard, our web address, clarkhoward.com. When you got a question for me, go to clarkhoward.com/ask. Mike is with us on the Clark Howard Show. How are you, Mike?
I'm doing well. Yourself, Clark?
Great. Thank you, Mike.
Hey, I just wanted to help you out with your informational arsenal. I'd heard you speak with a gentleman earlier about long-term care, and you had thought or made an assumption that it could be a UL. And I agree that wouldn't be a route to go, but there is also what's called an IUL, Indexed Universal Life. And they are actually great for that specific purpose because the way they work is they'll have a zero floor, so if the market goes down, the client loses nothing.
All right, let me step back a minute because people may not have heard that prior hour of the show. So let me give just a short little synopsis of what that was about. Gentleman called because he's in his 60s. He and his wife both in their 60s. They're concerned about how they're going to pay for long-term care. And they had met with an insurance person who had talked to them about buying a universal life policy. We looked up what kind it was because it was a specific brand name, and it was a universal life policy that came with a rider that would allow the death benefit to be diverted into a specific benefit, a portion of which would go towards long-term care at a set rate per month.
Right.
And what I had said was that I prefer for someone, if they're going to buy a rider like that, that they buy a whole life policy with a rider like that instead of a universal life policy because of the risks that have happened with universal life policies where they've essentially gone insolvent. So what you're saying is that there is a specific kind of universal life policy that deals with that insolvency issue.
Correct. And that's called an indexed universal life. And you can get those where they have what's called a zero floor. So if the market goes to pot, the client is just credited zero, so they lose no money. But the upside interest rates credited to the account are based on indexes, and there can actually be a fixed pot of money in there that can guarantee a specific interest rate.
Well, the thing that I get concerned about anytime we talk about indexed insurance products is that they're usually based on receiving some portion up to a ceiling of the gain of the stock market in a particular year, not including dividends, and that then in return, in a down year for the market, no loss is recorded in your account. The reason that concerns me is that in up years for the stock market gyrates. And so if an index is capped at 6%, which is a very common number, the stock market may have had a 30% gain in a year, and so you only get 6% of that 30.
That's correct. And just FYI, I'm actually in the industry as a full-service advisor. So I know how they work very intimately. And, of course, those types of products have to be placed very specifically and explained thoroughly to the client before they're even put in place.
And you know what makes me nervous about that? You sound like you're very experienced, well-schooled, and I hear in your voice that you take very seriously that you want to serve each of your clients with utmost of ethics.
Absolutely. I'm retired Air Force, and my core values are integrity, service before self, and excellence in everything that I do. I brought those core values to my clients from 20 years in the Air Force.
Well, I want to thank you so much for your service to our country and the U.S. military and the armed forces.
Thank you.
And around you, there are people who sell these products who don't share those values that you just laid out.
That is so true.
And the problem with products like a universal life policy is they are so complicated.
Yes, they are.
That if you have someone who is not ethical, well, you know what happens to that customer.
That's part of how I got into this business, because I got taken twice before I knew anything about this stuff while I was in the service.
Wow. Well, I am so glad that you are now devoting your second career to making sure that people who need to have an insurance need met, that is being met with the utmost of ethics, decency, and morality. Best of luck to you, Mike. And again, thank you for your service. When you have a question for me on the Clark Howard Show, go to clarkhoward.com/ask. And Robin is with us. Hi, Robin. How are you?
I'm fine, Clark. Thank you for taking my call.
My pleasure.
And I just have to say I've been listening to you and watching you from time to time for years, and it's really a pleasure.
Oh, well, thank you.
I have, over the years, taken your advice, and in this case, I want to try to help my 26-year-old son. He would like to buy a home, and he has good credit. He has waited and waited and waited, and he found a mortgage company. They've offered to give him a certain amount. It's not very much because he doesn't make very much. But what he's finding is, first of all, the homes in his price range really probably need work. The other thing he's finding is that the mortgage company that he has found has really not given him the information he needs, such as what his interest rate is going to be. And
now that's a big problem.
It is, I thought.
Well, when you do a mortgage pre-qualification, one of the things they should tell you is what the current interest rates are that you would qualify for. Now, with their interest rate subject to change until you lock in.
That's what I thought.
So he has only been dealing with this one mortgage company?
Right, and it was suggested to him by his realtor, and I suggested that he needed to do some comparison shopping.
Mom knows best, and you are right. You are absolutely right, Robin.
So what can you recommend? What we're looking for, and he's looking for a 30-year fixed rate. He doesn't want to play any games, and he intends to be in this home for the duration.
How much down payment money does he have?
He has no down payment money.
All right, he will need some because of what happened in the real estate bubble and the resulting bust. He's going to have somewhere like a minimum of 3.5% saved.
Okay.
And that is a key step to being able to buy a home under where he'll likely be, which is the FHA home loan program.
Okay.
And under the FHA loan program, an FHA participating lender, they will give him an interest rate quote right away because that's what the loan program is, what the current rates are.
Okay.
Now, one place that I would suggest is that he go to HUD.gov.
Okay.
And at HUD.gov, he can learn, they've got a full briefing on how the FHA loan program operates, what he is required to do in order to qualify for an FHA home loan. And because of the down payment issues, that is the place he should go. I cannot emphasize enough how important the down payment money is going to be. Good luck to him in the market. Joe joins us on the Clark Howard Show. Hello, Joe.
Hi, Clark. We received an unsolicited Cosmopolitan magazine subscription, and we haven't gotten a bill or anything yet, but I called Cosmopolitan, and they said a third party sent this out, and with no bill or anything, I know I Googled it, and online it doesn't look good.
All right, so this thing with people being signed up for magazines at random sometimes will happen because a third-party magazine service may have put a lot of pressure on their salespeople to meet quotas, and they at random will sign people up for magazines. It also could be somebody who thinks they're doing something that's a joke, or any of a number of scenarios could lead to unsolicited magazines coming. When you talk to Cosmo, I bet they were very accommodating at terminating the subscription, were they not?
Well, I didn't. I didn't ask him to, but I was going to call him today and do that.
Well, you do get quite a kick out of reading the cover of Cosmo, because the articles are the titles of the teases on the cover are quite interesting.
Yes, they are.
Yeah. But it's not content you're particularly interested in, I bet, because you're not a 22-year-old woman.
Get the magazine.
So, right? What's that?
I don't want to receive the magazine.
Right. So I got it. So if you just call them up and tell them they don't want to send you a magazine you don't want because it's a bill they're not going to get paid for. And as far as the third-party, quote-unquote, service in the magazine industry, all the magazine companies, not just Cosmo, they've all been allowing these third-party groups to solicit and sell magazine subscriptions because they're desperate to keep up their circulation numbers.
Right.
The problem is that you have people who either a service that is not ethical, or you have an individual working for one of the services who's not. So I imagine this will be pretty easy because they're so used to this happening to people who call up and say, hey, why'd you send me this? I don't want this.
Okay, I was concerned about my credit rating.
No, shouldn't be at all.
Okay, very good, Howard.
Okay, have a great day.
Mm-hmm.
All right, so telling you, if you ever want a kick as a guy, just go read the cover of the latest issue of any Cosmo, and you'll be like, really? Why are you looking at me so funny, Krista?
No, I mean, it just terrifies me for my daughter when I read the headlines on it. I mean, really, no offense to Cosmo, but I remember when I was younger and I would read it in college, it was very different. I mean, it was not as explicit as I would say it is now.
Yeah, we're all trying to keep this G-rated here. Follow me at facebook.com/Clark Howard. Our web address, clarkhoward.com. When you got a question for me, go to clarkhoward.com/ask. But right now, it's time for an Ask Clark. Joel, who do we have an Ask Clark from?
Yeah, Clark, this first question is from Reagan, who says, my wife is a stay-at-home mom. If I freeze my credit, do I need to freeze her credit as well?
Yeah, there's the fact that she's a stay-at-home mom doesn't change the advantage of doing credit freeze. If you're going to do credit freeze for yourself, then yes, she should do it as well. Because what a credit freeze does is it prevents some of the ugliest forms of identity theft where somebody opens new accounts as if they're you. It doesn't affect any of your existing credit. And when you need credit, you can go online and thaw your credit. The law generally is that your credit must thaw 15 minutes or less after you put in a request to thaw it. So it's a little bit of work to thaw your credit, but the advantage is you don't have to deal with the mess where somebody has taken over your identity and opened accounts as if they're you.
All right, Clark, and Barbara wrote in. She said, is there a good website you can recommend to do my own will?
Doing your own will, you got to have a simple situation, no blended families, not a lot of money on the table. But if you look at Willmaker, Willmaker is a program that is the most respected out there to do your own will. It takes you through a narrative of questions and and tutorials to help you prepare your own will. You can find it at nolo.com, NOLO.com, or there are many other sellers of Willmaker in its various versions available on the web, sometimes in retail stores as well.
You know, when you're going to buy a car, pricing information is great and necessary, but there's more to doing it than just the price. There's the actual buying experience. If you want to enjoy a better one, you should go to a True Car certified dealer. They're there to help you find the car that you want, and they're also what make True Car unique. With True Car, you can connect with a local certified dealer that you choose, so you can lock in a guaranteed savings off the MSRP and enjoy a totally better buying experience. And by better, they also mean faster. Over 2 million cars have already been sold to True Car users who have visited their True Car certified dealer. And there are over 11,000 True Car certified dealers nationwide, so it's probably pretty easy to find one near you. And check this, for a new car, average True Car users save $3,279 off MSRP. All right, so you're probably wondering, how do I do this? It's easy. Just go to TrueCar.com or, right there on your phone, download the True Car app. You can find the car you want, see the True Car pricing curve, which shows you what other people in your area paid for the same car, and that way you can know you're getting a good price and feel confident. Then you'll get a guaranteed savings certificate from the True Car certified dealer. Go to the dealer, and your guaranteed savings off MSRP will be honored, and you enjoy a quick, easy experience. How's that for car buying? So when you're ready to buy a new car, or even a used one, visit TrueCar.com or download the TrueCar app and enjoy the better car buying experience. Some features are not available in all states.
I'm glad you're with us on the Clark Howard Show. I'm going to have now and a half hour from now 2 different topics about you borrowing money for different circumstances and the way those marketplaces are changing so you can protect yourself. You can follow me at facebook.com/Clark Howard, on the web, clarkhoward.com. When you got a question, clarkhoward.com/ask. We're going to talk about something that has come up on the show over and over again, starting probably last summer. I received a steady increase in questions from people who own their own business that are looking to borrow money. And when you go to borrow money as a business, the way you used to borrow money is pretty much done. Because up to 10 years ago, someone who was an entrepreneur or a small business person would go to a bank to borrow money. Well, after the financial scandals, the crisis that followed, the failure and closure of so many banks, what happened was more than half of all banking in the United States ended up in the hands of 4 giant monster mega banks. Bank of America, Wells Fargo, Citibank, and Chase. And those 4 banks have nothing in their culture that equips them to do small business lending. And then at the other extreme, we had thousands and thousands and thousands of small local banks. Well, when the big banks got bailed out, the federal government let all the small banks fail. And so now there are very, very few small banks to go to anymore, that their whole reason for being was local lending in their communities, lending principally to small businesses. And, you know, you deal with the president of the bank, the chief loan officer, whatever. You'd know them. They'd know you. They'd know your background. And you would grow with the bank if you were successful. That pretty much is not impossible, but it's very rare you're going to find a small local bank with a heartbeat in its community. So what's taken its place are online lenders that specialize in lending to small businesses. And it's kind of a Wild West right now, from very legit, straight up online lenders to those that are virtually online loan sharks. charging interest rates of well more than 100% for loans to businesses. So right now, there's no rules that require when you're a small business and you go to borrow money from one of these online lenders, there's no rule that says that they have to tell you what the interest rate is going to be. And a small business person looking to borrow money, well, they said, yes, you signed for the loan, and then only later do you find out that you're paying a level of interest that would really fit the mob and not anything like traditional banking. Well, now I'm pleased to report that several of the legitimate players in online lending are now voluntarily going to start disclosing interest rates. And I'm hoping, knock on wood, that this will lead to common practice in small business lending. Cabbage, On Deck, and Can are all going to disclose the rates. So you'll know what you're actually going to be paying on your loan. And there will be a standard disclosure. So if you're competing, you're getting these businesses to compete for your business, you'll be able to see, oh, well, Cabbage is charging this, On Deck's charging that. Oh, okay, I'm going to go with this one, that one. You'll have the information to make a smart decision. It's much better if the industry does it itself instead of misbehaves, and then you know what happens, then government gets involved. But I want you to know, if you are a small business person, just because somebody says, yes, you can have the money, doesn't mean you should take it without taking the time to figure out how much in interest are you really going to pay, and is it going to dig you a deep hole for your business, or is it reasonable and affordable that'll help your business thrive as well as survive? When you have a question for me on the Clark Howard Show, go to clarkhoward.com/ask. And Ted is with us. Hello, Ted. How are you?
I'm fine. How are you, Clark?
Great, thank you.
Thanks for taking my call.
My pleasure.
I got two quick questions for you.
Okay.
The first one is, can you make a contribution to a Roth IRA if you're unemployed?
Only if you're married and your spouse is employed.
Only if I'm married and self-employed.
No, and your spouse is employed.
Oh, and my spouse is.
So if you're married and your wife works and she has earned income, you become eligible for what's known as a spousal Roth. You're allowed to do it because she's allowed to do it.
Okay. Is there a reason why you can't make a contribution? I'm single, so I don't have a spouse. So.
Well, the deal is that a Roth is a retirement account like an IRA, and you're only allowed to contribute money to an IRA or a Roth if you are employed. And I don't know exactly why that rule's in place, except maybe it was to keep kids from opening up, or parents from opening up Roth accounts or IRAs for their kids.
Okay.
Unless a kid has earned income.
All right.
Now, if you work at any time during this year, then you'll be eligible to do a Roth.
Okay. I mean, I have a Roth, but I'm not currently making any contributions.
Right, which you cannot unless you do work this year.
Okay. But let's say I was only employed for a short period of time during this year. Can I only make the contribution while I'm employed?
No, you can make the contribution. Let's say you end up working September through December, just for argument's sake. You would be eligible to do a Roth at any point because you will have been employed at any other point during the year.
Okay.
But you're limited in what you can contribute up to your earnings in that year. So let's say you were to earn $3,000 this year, you'd be limited to only contributing $3,000. Gary's with us. Hello, Gary.
Yes.
How are you?
Pretty good. I have a loan on a motorhome, and I'd like to start paying more on it than the payment. Should I make two checks out, one for principal only for the difference?
Depends on your lender. If the lender says to properly credit additional principal, you should send a separate check, I would do so. Do you have a payment coupon for the...
coupon.
All right. Now, on the payment coupon, there should be a box for additional principal payment.
It doesn't have that, no.
Ah. All right. Did you get your motorhome loan from the motorhome dealer?
Yes, I did.
The thing about this is, since it was a dealer-originated loan, do you happen to know if it has a prepayment penalty?
I think it doesn't.
All right. You want to find that out because, see, a prepayment penalty, the way those are set up is you're punished for paying your loan early.
Okay, I'll do some checking on that.
All right, here's the next thing to find out. This is also a danger with a dealer-originated loan, even if the paper is ultimately with the bank, is you want to make sure it doesn't have what's known as rule of 78s or sum of digits. If it calculates interest either of those ways, it doesn't do you any good to send them extra principal on the motorhome loan.
Okay, what was the second one? Rule of 78?
Rule of 78s or sum of digits.
Sum of digits.
Right. And it's hidden in the paperwork for a loan. What you want to see are these two things. You want to see that the loan is calculated by simple interest and also that there's no prepayment penalty. If you hit those two markers, then you're fine to prepay. What's the interest rate on the motorhome loan?
It's around 7.
Oh, yeah, you want to prepay on that. As long as it doesn't have any of those gotchas I talked about, you want to prepay. Alberto's with us on the Clark Howard Show. Hi, Alberto. How are you?
Hi, Clark. Thank you for taking my call. Good morning.
Good morning.
I'm hoping that you can help me. My son will be driving in about 3 weeks, and I'm not sure if I should, or if it's even possible to buy a separate auto insurance policy for him, so that in the event of a possible accident, it doesn't affect my rates.
Yeah, and what people do for this is there is no good answer with a teen driver. Let me first start with that.
Okay.
There are no good choices. It's only what's the least bad. And the least bad is for him to have an old beat-up car that you only have to buy liability on, and that he has a completely separate policy, even potentially from a different insurance company than yours.
Okay. So
and that he never drive the cars that you have under your existing policy.
Mm-hmm.
Now, that is general advice and not always accurate. Do you have an insurance agent, or do you call a toll-free number at your insurer?
I have an agent.
So if you call your agent, give your agent different scenarios and ask which of these is going to work best for me.
Okay.
And is a new young driver, is he 16? How old is he starting to drive?
He's 18.
Oh, that's good for you.
Oh, yeah, okay.
Yeah, because in some states, young teenagers can start driving at 15, some 16, some 17. 18 is to your advantage because there's an assumption that an 18-year-old has more maturity than a 15 or 16-year-old. Maybe, maybe not, depending on each child.
Right.
But that can help some with what kind of premiums you'll face. But I would rely very much on your agent to give you guidance on what's going to be the cheapest way. With your question of creating a firewall that if your 18-year-old has an accident, a separate policy and a separate car is usually the best answer. But again, ask your agent, what is your thinking about what your son will be driving? Is it a vehicle you already have?
Well, for right now, he's going to be driving my old 1999 Odyssey, and then to see how he does, and then in about 8 months, I'm going to buy him an old beat up car, like maybe a 10-year-old car.
So a 15-year-old Odyssey. That's going to look really impressive for a teenager to be driving a 15-year-old Odyssey. Good for you. But he will have wheels, so you shouldn't complain.
Wheels.
That's funny. So make that agent earn his or her commission now.
I will do that then.
Okay.
Clark.
All right. Best to
advice.
you. I do. I have a deal for you. You get to drive a 15-year-old minivan as a teenager. When I used to take my oldest daughter when she was a teenager to school in my Scion XB, my bread box on wheels or toaster, she would be horrified, and she'd wear like a baseball cap or something so no one would see her in that car because she was so embarrassed to be in my Scion XB. Follow me at facebook.com/Clark Howard. Our web address, clarkhoward.com. When you got a question for me, go to clarkhoward.com/ask. Elizabeth is with us. Hello, Elizabeth.
Hello.
How are you doing?
No, I'm doing really well, and I thank you so much for all your wonderful information.
Well, you're kind to say that. Somebody was calling you who was not so wonderful.
No, he said he was from the U.S. Customs Department, and he had a great deal of money and a really pretty car to give me. All I had to do was give him some information.
Okay, I've not heard that one before.
Yeah, I was really impressed. So I thought I'd call and tell your listeners and yourself about it.
Well, I appreciate it. Did it go far enough that you heard what kind of information this supposed customs officer wanted from you?
No, I didn't let it go that far, and I apologize.
No. That's fine. Because what anyone should know is nobody from the federal government is going to call you out of the blue and promise you all kinds of things and say, I just need some information from you. They're obviously going to be involved in some kind of account theft or identity theft, and you knew instantly, Elizabeth, that this was bogus.
Oh, definitely.
So I appreciate that tip because that's one that hasn't come on my radar screen yet.
Thank you.
Thank you. Have a wonderful day.
Okay, you too. Bye-bye.
Bye. And Glenn, quickly, you got a fake check in the mail. Tell me about that.
Yes, Clark. It was from a credit card company that I'm no longer affiliated with. I closed the account a couple of years ago, and a check for $1,100 plus suddenly showed up and said, this is because we failed to send you a statement in March of 2009. And they had a number for the consulting company that was handling the payout. I called them up. They assured me the check is good. It's from American Express. I'm sorry.
That's okay. You can say American Express.
I'm sorry. Okay.
That's okay.
And they said that it's not part of a promotion. It's because of a statement that they failed to mail me out. I find it difficult to believe because I didn't even notice I didn't receive a statement back in March of 09 or 08. And here we are with $1,142. And
yeah, and you know that check is almost 100% certain to be bogus, right?
You know, that's why I haven't went to cash.
All right, so go to AmericanExpress.com, find a phone number for customer service there, call, and they will almost certainly verify. I've not seen a warning. I'm an American Express customer. I've not seen a warning of fake checks coming out, but I would call and see what you can find out from them because almost 100% it is bogus.
Stay tuned for 60 seconds of AP News headlines right after this podcast.
Welcome to the Clark Howard Show, where it's about you learning ways to keep more of what you make. Follow me at facebook.com/Clark Howard. Check out our deals site, deals.clarkhoward.com. And when you have a question for me, clarkhoward.com/ask. So we have a problem going on in the country, and that is a mountain of student loan debt in the trillions collectively that former students are having trouble paying. The default rate keeps going up and up and up, and people hit a tough point and they default on the loans. But student loans just don't go away. They stay after you and they hound you in your life and they keep you from moving forward with your life. Listen to this, though. 7 out of 10 people who end up defaulting, there's no reason for them to default even if they've hit tough times. Because 7 out of 10 people, according to a new study, qualify easily for one of the alternative payment plans that you would be able to handle even in crunch time in your life. And people don't even know those are there or available. Our producer, Kim, went on recently to look at a new tool available for you that lays out what the options are for your student loan. And it's very easy to understand. It's available at the website of the Consumer Financial Protection Bureau, cfpb.gov. And it takes you through the various options that would potentially work for you. It also shows that if you have gone delinquent, how you come out of the cold and get back in good graces using one of the alternative payment plans that are available. I know that for many people, the student loan debt that you carry is so high and such a burden that you feel like there's no way out. It's not true. In a move that most people welcome, many people find totally unacceptable, the federal student loan program now offers a variety of loan forgiveness options, where if you jump through the right hoops for the right number of years, the remainder of your student loans are forgiven, generally after 10 years or 20 years of payments. And because the payments can automatically adjust with your income, if your work cycles up and down, if you go through a period of unemployment, the flexibility offered with the alternative payment plans will keep you out of harm's way and out of default. My experience when I talk to people who have walked away from their student loans, and by the way, they don't go away, you just have put them on ignore. People are not able to tell me how much in student loan debt they have, what interest rate it carries. Generally, people who have ignored it can't answer anything about it, and that's not how you solve a problem. So face up to it. Know there are very good, viable options for you to be able to handle those federal student loans. And before you know it, hopefully you'll be back in good graces with your payments, and you'll be on your path to being done with them. Because remember, the maximum you'll have to pay under the new rules is for 20 years, no matter how much you've borrowed under the federal student loan program. Follow me at facebook.com/Clark Howard. Our web address, clarkhoward.com. When you got a question for me, go to clarkhoward.com/ask. Gary's with us on the Clark Howard Show. Hi, Gary.
Hi, Clark.
How are you doing?
I'm doing just fine, thank you.
You want to comment on something that has been quite a conversation recently, and that's about staying loyal or not loyal to an insurer for auto or homeowners.
That's correct. I've been trying to follow your advice. My homeowners and car insurance is coming up for renewal next month, and so I've been shopping around with different insurance companies, and I've had some who have actually told me that I will not necessarily get the best rate because I'm looking to change frequently. And I thought, well, at what point will I start to get a better rate? And they're telling me that if I stay with a company for 3 to 5 years and then want to change, that I would get a better rate. So I feel like I'm being penalized for being loyal, which you talk about, and then I'm being penalized for not being loyal.
Okay, actually, 3 to 5 years. Before you said it, I was going to guess you were going to say 3 to 5 years. Because there's an acquisition cost for a company getting a new customer, and I don't think there's a problem to shop sometime in that 3 to 5 year window. But if you do shop too often, you're just a hopper, and they don't have any real desire to acquire you as a customer.
Okay, well, that makes sense.
So I think that the answer you were given is exactly the right answer. That most people, when they get with an insurer, that's it. They're done. They stay with them for year after year after year. And I don't know if you heard me say recently, that's why the new forms of, to call it credit scoring isn't quite the right term, but there's a new data mining thing where companies can pull your loyalty score. And if you're someone who shows to be hyper loyal to someone, then they may want to acquire you as a customer, but then over time, they will continually bump up your rates because they know you're such a loyal kind of personality. On the other hand, they may have pulled up your loyalty score and seen, oh, this is somebody who doesn't have any loyalty at all. Forget him. So if you want the absolute best combination, somewhere in that window of 3, 4, or 5 years gets it for you.
Okay. Well, that makes sense. And
how good are you at keeping track of time? Because a lot of people lose track. They forget, oh, I've been with them 8 years. I thought it was 3.
Yeah, I'm one of the people you were talking about, because I would be with insurance companies for quite a long period of time. And I would just be appalled at the amount that it was going up and going up and going up. And I'm not filing any claims. So your question would be, from my perspective is, what am I doing wrong?
You're not doing anything wrong. I mean, if you cycle through 2 or 3 insurers each decade, you're fine. But more than that, you're not okay. And less than that, you're probably harming yourself.
Okay.
Okay?
Well, thank you very much for your time.
Sure. Glad you came along here. And I want to give another example. You know an industry where they're absolutely gouging people who remain loyal? It's if you still have a phone line, a residential phone line from the monopoly local phone company. They know that the people who at this point still have a phone line are people who, for whatever reason, are going to keep having a phone line. So the phone companies have been working hard in state legislatures to get exemption from price setting by the state legislatures and allowed to set prices wherever they want. And so the phone companies are pushing rates up and up and up and up for anybody who still remains with a landline in their home. Your loyalty you're getting crushed for. If you want to have a landline in your home, look at something known as Straight Talk Home Phone. Straight Talk Home Phone. You don't need internet access. All you need is you need to buy a box that tends to be available $80 to $100. Once you own it, you get your phone service, including unlimited long distance, call waiting, caller ID, blah, 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 all the calling features, $15 a month. Compare that to what the monopoly local phone company is charging you, and you can see Straight Talk Home Phone. Most Walmarts have a display for it in their electronics section, or you can look at it at straighttalk.com. Eric is with us on the Clark Howard Show. Hi, Eric.
Hey, Clark. How are you?
Great. Thank you, Eric. How can I be of service?
I'm calling because my wife and I, we're going to be taking a trip to Paris this summer, and I was trying to pick which area of Paris to stay in, so I looked at Rick Steves as a book on Paris, and one of the areas he recommended was the Mariaz, I don't know how you pronounce it.
And no chance for me. Krista can pronounce anything.
Le Marais?
Le Marais?
The Marais, okay, I think that's it. It's Marais, something like that.
Okay.
Now, a travel agent we were speaking to, she recommended another area, and that area is it's right by the Louvre, and that area is called the Louvre Champs-Élysées, something like that.
Champs-Élysées.
Yeah. So I'm not sure which area to stay at. Do I follow the travel agent or follow Rick Steves? I wanted to get your opinion on that.
Well, Rick Steves is great. The places he recommends are fantastic. But how many days are you going to be in Paris?
6 nights.
I would like you to maybe ignore the travel agent and possibly Rick Steves and go to Airbnb.com.
Okay.
Because Airbnb has a massive number of listings in Paris divided by 15 different neighborhoods. And you can read, if you cross-reference Airbnb with TripAdvisor's Guide to Paris. And do you have a smartphone?
I do.
Go to your, do you have an iPhone or Android?
iPhone.
Okay, so go to the App Store and download the free TripAdvisor City Guide to Paris.
Let me write that down.
It has fantastic mapping of Paris where you can tune in to where everything is. It takes a good while. Make sure you're downloading on Wi-Fi and not on the cellular network, because it's a pretty robust app. And first it downloads the initial shell of the app in 15, 20 seconds. But downloading the full information takes it even over Wi-Fi a couple of minutes. And you use that app on your phone, cross-referencing with what you find on Airbnb. And with the 6-night stay, I think you'll be much happier renting somebody's apartment on Airbnb than you will be staying in one of Rick Steves' hotels or a hotel that your travel agent would advise you to go to.
Yeah, and I was thinking about that too, because then if we stay at a hotel, we'd have to buy every single meal, whereas if we stay at a condo or apartment, maybe we could cook maybe breakfast and lunch or something, save some money that way.
That is 100% the case. And, you can go in Paris, there are so many wonderful markets, plus the supermarket chains. And so you can buy a lot of provisions, and you can eat picnics in the beautiful parks for lunch. And there are so many options when you have that kitchen. Now, to call it a kitchen in Paris, what they consider to be a kitchen is like what little girls get as a play kitchen when they're like preschool age. That's about the size of a kitchen in a Paris apartment. So be prepared for that. But and also, what month are you going?
We leave July 29th.
All right. So in lots of places in Europe, air conditioning, not so much. You better have air conditioning that time of year. And everybody leaves Paris. Every Parisian abandons Paris when you're going to be there. So you'll find your best deals perhaps of the year on Airbnb with what your travel period is.
Okay, perfect. And that app, it was called the TripAdvisor Trip to Paris City Guide?
No, it's the Paris City Guide from TripAdvisor.
Paris City Guide. Okay.
Yeah, so you take that, you cross-reference Airbnb, and trust me, read a lot of reviews. Even if a place says they have air conditioning, read the reviews from people who've been in that place in summer and see if it really has air conditioning or a thermostat that pretends there's air conditioning. Because a lot of times in Europe, the air conditioning is the most feeble thing ever, and you don't want to roast. When you have a question for me on the Clark Howard Show, go to clarkhoward.com/ask. But right now, it's time for an Ask Clark. Joel, who do we have an Ask Clark from?
Clark, we have a question from Jim who says, what are the pros and cons of buying a $16,000 used car using a credit card with a $19,000 limit, but then paying the bill off right when it comes in?
Well, it would be great, except the dealer you're buying the car from won't let you do it. The reason is that on a $16,000 car, the dealer would pay 2% of that typically in credit card processing fees. And so they're not going to let you do it. Many times a car dealer will let you pay a deposit or a down payment with a credit card. But as a general rule, they're not going to let you buy a car with a credit card. So the whole point of doing that would be to get rewards, get reward points or dollars or frequent flyer miles or whatever it might be. But that just isn't going to happen.
All right, and Joe's got a question. He says, is it necessary to use certified mail to send an income tax return in?
No, you do not need to use certified mail. If you're mailing in a return instead of e-filing, then you can go to the post office and do something known as certificate of mailing. It is a form that is much cheaper than certified mail. It is your proof that you mailed something to the IRS. The odds that a return just goes completely missing are so low that that's not something to really concern yourself with. But if you really are worried, what I prefer is that you send your tax return FedEx or UPS, which you're allowed to do. The IRS has an actual physical address, depending on where you are in the country, that you can find at the IRS website to send a FedEx or UPS. Then there's no question that you sent it in, when it was received, when it was sent, when it was received. You got all that tracking and tracing, and that would be a way for you to make sure that the return actually got to the IRS. Your choice. But e-filing is my favorite way for you to file a return. Less errors in inputting occur when you e-file. Remember, you can post a question for me at clarkhoward.com.
Thanks for listening to the Clark Howard Podcast. Download new episodes every Monday through Friday at podcastone.com. That's podcastone.com. Stay tuned for the latest AP News headlines from Podcast One, right after this. When shopping for car insurance, consider this. Geico has been saving people money on car insurance for over 75 years. So if you're serious about savings, it's simple. Go to geico.com. After 75 years, they know how to save you money.
AP Update, I'm Diane Kepley. 12 years ago, a young Barack Obama thrilled Democrats at their party's convention in Boston.
There is not a black America and a white America and Latino America and Asian America. There's the United States of America.
And tonight he takes the stage in Philadelphia to pass the torch to Hillary Clinton. At the same time, Democrats are warning of what could happen if Donald Trump becomes president. Vice President Biden.
No matter where you were raised, how can there be pleasure in saying you're fired?
And former New York Mayor Michael Bloomberg was also sharply critical of Donald Trump.
Hillary Clinton understands that this is not reality television. This is reality.
And tonight, Tim Kaine was also nominated to become vice president.
I humbly accept my party's nomination to be vice president of the United States.
AP Update, I'm Diane Kepley.